Trading turmoil, Wall Street took another major hit yesterday with the Dow dropping 2,000 points. It's almost 8%, the steepest drop since the financial crisis of 2008. We don't want you to freak out about this, so financial analyst Justin Halverson from Great Waters Financial is with us this morning. Justin, thanks for coming in.
Thanks for having me, Jason.
Obviously, these numbers are extreme. 8% is significant. Some signs this morning of a rebound, but why are we seeing such extreme swings in this?
Well, there's a lot of reasons for it, but ultimately, the coronavirus and the trickle effect down from that is obviously severe, and it has a major impact on the economy, on our emotions, on our spending habits. Now, as of yesterday, it trickled into oil. We'll talk about that in a second. And so there's just a lot to it, and because it's so unknown and because it's global in nature, there's just a lot more concern than there has been in the past.
Investors don't like that.
They don't like uncertainty, absolutely not.
Now, for the rest of us, because let's be honest, most people out there are not selling stocks. Probably most of our viewers are only holding stocks in whatever retirement fund they might have. Does this truly affect their personal economy?
Well, I mean, other than the emotional side of it, because with investing, fear and greed kick in. When things get really good, we get greedy, we buy at the top. Things go down, we get fearful, we sell at the bottom. But as long as you don't sell, you don't lock in a loss. I know it's cliche, I know it's hard to hear right now, but like we talked about a little bit earlier, it's about how close you are to retirement, how close you are to needing that money. That should determine some of those decisions you made ahead of time.
Let's talk about oil prices, now around $34 a barrel. This will be good news at the pump for people, likely. But is this bad for the economy?
Well, I mean, that's the big trigger that caused the market to go down 2,000 points yesterday. And so with China's economy slowing down, the demand for travel going down, the demand for oil went down. And so there was an agreement that was trying to be made between Russia, Saudi Arabia to lower the supply. Russia disagreed, Saudi slashed the prices, and now oil tumbles. There's a lot of underlying concerns in the underlying credit markets with that, and so that's why that trickle effect was so severe. The
economy is going to be strange in the coming weeks.
Yes.
Normally, when you have kind of consumer, maybe a lack of confidence, businesses can lower prices or they can upgrade perks or there are things they can do to stimulate supply. What happens when the public just says, I'm not going to restaurants, I'm not going to travel, there's zero demand? What happens there?
I mean, I don't know if we've seen anything like this before, and so I guess we don't know exactly, but obviously it's going to have a major impact on businesses, their earnings, their profits, the underlying markets that go along with it, which is what we're seeing priced in right now. But because there's so much uncertainty, there's no precedent for this. I think that's why it's a little bit more concerning than it has been in the past.
Right. We don't know.
Yeah.
Okay, Justin, reassuring, maybe not. I don't know.
Stay the course. We're going to get through it, and don't let fear overtake you. Stay confident and live your life.
Very good. Justin Halverson, Great Waters Financial. Thank you. Riley?